What is up, guys? So it's been a while. Let's take a look at the prices and the charts. You can see that, at least from the crypto bubbles perspective, the altcoins are popping slightly. Some of them up double digits, others just in the single digits. But today is going to be a more high time frame show. We're assessing, is there a possible Bitcoin bottom that is forming, and what we could potentially expect going into the year of 2023 as we wrap up this final year, which has been a difficult year. If you do have a look at the charts over here, excuse the background and everything. I hope there's not too much noise. I am, of course, on vacation at the moment, but I am still bringing you, of course, crypto love and wisdom and a crypto stream. So first, I wanted to take a look at the monthly chart over here, and you can see two very noticeable things. One is essentially, if you just look at this chart and you take it as face value, this is not meant to be a trend line. It's just kind of showing you the approximate angle of which this trend has taken place within, and this is a very, very strong downtrend. There's absolutely no denying it, but we are, which is good news, approaching a key level, which if you take a look on the left-hand side over here, this is a key monthly order block level where I would expect at the very least a reaction to occur within the Bitcoin price over here. That area is coming in, as you would all know, between $10,000 and $13,900. $13,880 is a very, very key level. It's a key yearly level as well. And I do expect that zone to get tagged. The question is, do we have a relief rally first, or do we go straight down and tag it before any relief? A relief rally would look something like this, probably a push up potentially even to $30,000, and then eventually come back down. Now, my ideal scenario would be if we just went straight down into this zone, tagged even possibly below it, and created our accumulation phase over the next few weeks, because obviously that would be a less painful scenario than going up for a small relief rally and then straight back down. And we'll cover those underside resistance levels and everything that could potentially be tested in the weeks to come. So high time frame, mark off on your charts, key monthly order block level between 10 and 14,000. And then you do know that you have the yellow trend line over here, which is coming in, assuming price had to get to that level within the next couple of months. That means prices could go just below $9,000. That's one of the worst case scenarios. Now, if you look at Benjamin Cowan over here, and he shows that the Bitcoin year-to-date return on investments are somewhat similar to what we saw in 2018 and 2014. So you have the dashed purple line is 2018. If you had started to buy in the beginning of that year, in the beginning in January of 2018, that would have been your drawdown, which was actually worse off than what we've seen now. 2022 is the solid purple line, which falls just in between what the return on investment would have been for 2014 and 2018. So what that means is we kind of right around where we would expect that we would have been in a typical bear market environment. Although a lot of people feel that this time is a lot worse, it's actually not. It's actually very, very similar time-wise. We're in about the same place. And you will remember that I've given the overlay of this chart. It is on my Twitter. If you do want to see it there, it's pinned to the very, very top. And it's a thread that I wrote on why I said I, a renowned bear, believe that we are approaching maximum opportunity, and how I plan on buying at or near that bottom, all whilst practicing solid risk management. So bringing this chart up again, just to show you in relation to where we were the last time I showed this, we have just been consolidating in a sideways price action manner. And this is still a possibility that we could capitulate down into the zone. But if you are wrong, what you would expect to see is you would expect to see price to just crawl sideways around here, maybe a couple of spikes up and a couple more spikes down into the range low, anywhere around that $15,000 to $16,000 region. And that would give you an opportunity to add to your dollar cost average portfolio. So again, that's just high time frame. Everything is in there. If you do want to go and have a look, go check that out. And then relating to the different ranges, the main ranges that we're in. Now, what would a bullish trigger look like in this scenario? This tweet is also attached in that thread, by the way. Sorry, this chart is attached in the tweet thread that I've given. So feel free to go and have a look at that. But we went through the entire emotional cycle that an investor typically goes through the boom and bust cycles of the market: complacency, anxiety, denial, panic, capitulation, anger, and then you ultimately go into depression. And now that is the big question mark that we have we hit the capitulation, anger, and depression phase, or are we still yet to see the depression phase? I do think people have been somewhat depressed, but I don't think that we've reached that ultimate level yet. But if I am wrong, and we have, it's a very, very simple trigger plan here to go long, because you do have your main range, which is range 1. This is where price spent a lot of time, pretty much from December 2020. We moved around within range 1 for quite a long period of time. And then you had range 2, which was very, very short-lived. So this was the least amount of time, where we pretty much ripped through in 2020 and we went parabolic. And then you had the next phase over here, which we also came through very, very quickly in June of 2022. And then ultimately that led to our breakdown level. So the question is, what would this look like if things started to change and we started to get bullish? Well, you can see a clear distributive pattern on the high time frame on a weekly chart that's taken place over here, which obviously involves a series of higher lows lower highs and lower lows, so distributing all the way down. Now we would need to break back above this range over here, which is the orange line over here, you can see as a key horizontal. Simultaneously, you would need to break that diagonal, which is coming down, and pretty much the level to clear is what I previously left you guys with on the last stream that I did, which is $21,500. Nothing has changed in the 10 days that I've taken off from the streams. Pretty much you have here lower high, swing low. This could be a spring, according to Wyckoff accumulation, which I'm going to cover in a moment's time in a couple of charts time in the stream. But if this is a spring, what you would expect to see is a breakthrough this range high level, which is coming in at $19,000. Once you clear that level, you start to pay attention. There might be a retest into that zone, but ultimately you only become bullish above 21.5, which is when you clear that level. Now you can start to target back to the mid-range of range 2 and possibly even the range high, and that would give you a test of the underside resistance, which may be just a final relief rally before ultimately going into that depressive phase and coming back down. So without all the lines of there, let me show you what that would look like. That would look like this: up and through, retest that zone, and then eventually come back down and cause that depression phase, which is what I've shown you on this chart over here. So this chart over here, if you do get a major relief rally, a reaction, maybe a dip into the order block, come straight back up, and then eventually come down into an accumulation phase. But there's no two ways about it. There will be an accumulation phase, and I don't think that this is a strong enough one yet. At least if it is, it's only for a short-term relief rally, which I'm going to show you those charts in a moment. But with that being said, looking at the volatility indicators over here, so the chart on the bottom, this is your Bitcoin volatility divided by the volatility of the S&P 500. Extremely low levels. The lowest reads that we've actually ever had. We haven't seen these levels pretty much in Bitcoin's entire lifetime. It hasn't spent this much time this low, which just tells you that the next move is going to be absolutely massive. You can see the Bollinger Bands are starting to close in, and I definitely do not recommend front running any longs yet until you clear that zone over there. Again, it's 21,500. Getting above this area here to form your next higher high would also start to get above the upper Bollinger Band, which is currently coming down, and then maybe this expansive phase will kick in towards the upside. Otherwise, any bounces over here, I would continue to treat as a relief rally, which you would want to sell into, and you can see that this area is met with a huge amount of resistance. And when I say this area, I'm talking about anywhere between 18,000, we can probably give it a little bit lower, 18,300 to about 19,300. So it's giving you $1,000 range. any rallies into that zone are going to hit the middle Bollinger Band, which is the white one, as well as test this as underside resistance. And I would want to be a seller of that if I saw that. And that is pretty much how I made that call just before we stopped with the streams to go on vacation. I said that I'm selling 18,150, which is this candle over here. The candle went a little bit higher, got to 18,000. Let's just click on that. It got to 18,387. I sold 18,150. And then ever since then, we have not revisited that price level. So looking at the weekly chart over here with our different EMAs and MAs, you can see also all this resistance is within that zone, which is what I just showed you. If you have a look at that, that level meets up as well with the yellow 21 exponential moving average. So I've told you guys before in the history of Bitcoin, if you do want to kind of use this as a general trend gauge, it's a very, very easy one to use. Just look at the yellow line. Anytime that you are below it and it's angled to the downside, you do not want to be in the market, because what you see is rejection after rejection. Try to get back above, failed, came back down, didn't even make it into that zone again, came back down. And if you have a look, the resistance level that I've given you on the previous charts is coming in at 18,400 up to 19,400, which matches up with that exact zone is the yellow 21 exponential moving average. It's going to be hard for Bitcoin to clear through that level. And again, it brings additional confluence that once you do get above this zone on the left-hand side to form your next higher low, or your next higher high, excuse me, so you break through this region, then you're going to start to clear a massive cluster of resistance, and then things start to change for Bitcoin. So once you get above those zones, for now, the probability is much higher on the short side than it is on the long side. I continue to pretty much say it as it is. That is exactly the way that I see it. You have your 255 MAs, the orange one, starting to flatten out. That is not a good sign, not what you want to see. You also have the purple 200 MA, which is soon going to start rolling over to the downside. And the 200 MA, the 200 exponential moving average is the white one, has already started to roll over. So that usually gives a front run sign of what the MA is going to do next. Because remember, with exponential moving averages, it gives additional weight to the most recent week of price action, whereas with the MAs, it divides it all up equally. So basically, if your EMAs start to roll over first, that will be a sign that that's probably what the MAs are going to do next, and vice versa. If the EMAs start to turn up first, that means the MAs will likely do the same. MAs, moving averages, move slower than the exponential moving averages. Okay, inverted chart to remove our bias. So we look at things upside down, meaning if this chart goes up, price is going down. If this chart goes down, price is actually going up. You can see a very, very clear uptrend over here. This was a strong area of resistance to break through previously. That has been cleared. You can even argue that this zone over here has been a retest of that to confirm it as new support. New support means new resistance, actually, because it's the inverted chart. And ultimately, I look to the next level of support. Here is your major range. You're stuck between that 18, 19K level, and the bottom of the range is the 10 to 12K region. So I would be looking at that as a retest and waiting to see if we're going to make it into the next zone above. So that's what I'm watching over there. Bitcoin on the 4-day chart using our different moving averages, the all faithful moving averages. I hope this is as clear to you as it is to me. I look at this chart. It's so simple to read over here. Pretty much stuck below all the different moving averages, below the short, below the medium, and below the long term. That is essentially a signal that you do not want to be in the market. On top of that, you have a wonderful horizontal zone of confluence over here. Look at the perfect wick retest of that area over here. Underside resistance, and then retest into that zone and sold off. Question is, again, do we get one more retest into there? This is an even stronger sell signal for me if we come back into the zone, because now you have the purple moving average, which is also coming into that level as resistance. And that lines up with all the different moving averages that I just showed you on the weekly chart, those being the 21 the 200 and the 255. They all fall within this region over here. And have a look again. This is your zone to clear. That is 21,000 on this chart. The wick high is 21,500. The bodies are coming in at 21,160. So you just keep moving it level to level to level. For all I know, this could end up being the next lower high that looks something like this, and maybe prices go down further. So it's very, very easy from an emotional standpoint for me, because I've been out of the market for a long time and I just remained patient, working from level to level. It was needed to clear this level, then we needed to clear this level. We failed to do that. Now we need to clear this level, and so forth. We just continue on with that route. But if you are bull, stay tuned, because I do have one bit of potential hopium or good news for you, which I'll show you in just a moment's time. Okay, the S&P 500 over here. Also, guys, make sure that you like the video, subscribe to the channel, and hit the bell notification. Please comment on the video, interact with the stream, because it is an unscheduled stream. People weren't expecting me to go live, so it would help to get the show out there. Okay, S&P 500 futures chart over here. We had a strong rejection. You guys know it. Nothing has changed over here. It's just been slow. That's all. Trend line touch over there. Initial sell-off. Next touch, sell-off. Next touch into the 200-day moving average. Sold off. Tried to deviate above. Massive bull trap within this zone. Sold off. And now I'm pretty much just looking for low prices, expecting at least a test of this orange trend line over here, or orange horizontal line, which is the range low. Then a possible attempt up one more time. And ultimately, I'm still leaning towards my main target. I've had to remain patient for a long period of time, but I do think eventually that zone does get hit. Now, a very, very big and important chart to be looking at is the Bitcoin dominance chart over here, because you can see many, many trend line tests over here. It's quite a strong area of support for the Bitcoin dominance. Anytime that we've come into, well, just below the 40% mark, 39.7%, there is a strong reaction towards the upside. I'll be watching now to see Bitcoin dominance get up to 44%. And if it holds above the mid-range, which it has on my other Bitcoin dominance chart, I'll show you in a moment, then I expect a test of the range high coming in at 48%. Now you have to ask yourself the question, if that is going to be the case, is that going to be good or bad for altcoins? Well, since the market is trending strongly to the downside, as I've just shown you, I would anticipate that that would probably mean a sell-off in crypto, which most altcoins will, or people remaining in the market are going to sell their altcoins into Bitcoin. Bitcoin's going to spike up, and altcoins are likely going to go down. So I don't think that we've seen the final leg down. Here's the other chart. This chart just minuses the stable coins out of the mix, so it doesn't influence the dominance as much. And this one has already reclaimed its mid-range at 49%, looking to get up to 52% if you take out the altcoins. Now, that also brings in an interesting question, which is, I think, everything that's gone on with FTX and all the mass liquidations as well within major funds like 3AC, that might open the door for regulation to come into play. And that regulation, of course, will be around the altcoins, most likely before Bitcoin or anything else. Bitcoin has already been deemed as not a security. And therefore, I would anticipate that is one reason why Bitcoin's dominance is going to the upside. So, other important charts to look at in traditional markets is Dylan Leclerc says here that once inflation gets above 5%, it's never come down unless the Fed funds rate has gotten above the CPI rate that is said by Stanley Druckenmiller, who's a big hedge fund manager, billion-dollar hedge fund manager. And essentially, if the Fed funds rate goes up, that means that the interest rates are going to continue to rise. And we know that's probably not going to be a good thing for crypto. And I'm going to show you in a couple of moments' time the different yields. They are doing some interesting things over here. But VIX first. VIX is, again, the volatility index for the S&P 500. It's been actually quite easy to trade this year. Any time that the VIX has come into the box below in the last year, which is anywhere between the 18 and 20 mark, you expect to find your local tops within the stock market. And then any time that it gets within this zone over here. Let's just quickly see if I can draw that again. Grab that. So anywhere between 34 and 36, that has essentially been your local bottoms within the market. So do keep an eye out on that. Your big moves happen above the risk line, which is 30. 30 is the risk line. Currently, you can see volatility is low. As I'm sure you all know, volatility is low. The Bitcoin's looking like a stable coin. It's been stuck at the same price for weeks, but it is nearing that point where you would expect some level of expansion. And you can see that within the yield curves as well. So if you have a look over here on the 30-year yield, it has bounced off of a very, very key level, that key level being 3.4%. Now, the next thing that I want to do is I want to watch to see, is this going to be a lower high? If so, that could be potentially something good for Bitcoin. So crypto is at a pivotal point right now because traditional markets are at a pivotal point when it comes to the yields. If you see the 30-year yield go up like this, and of course form its next lower high, then it will probably break the strong horizontal zone on the next leg down. And typically that would mean that crypto or risk on assets are going to rally. But at the moment, this is still very much an uptrend. It's pretty clear. You can see you have over here series of higher lows, and you have a series of higher highs over here. So I would still be looking for higher prices at the very least. I've become defensive. If I were trading something like this, I would start to pay attention once we reach the 4% level underneath over there. But according to what I just showed you with Dylan Leclerc, this you should expect to continue to go up. Okay, 10-year yield. 10-year yield looks similar. Also bouncing off of a key level, which is coming around 3.4%. This was a very, very strong resistance zone. Resistance zone is coming in at 4.2%. We'll pay attention to this in the new year. I don't think it's going to be that relevant now. Of course, not too many people are trading. It shouldn't move too much yet. But in January, when we come back and we open shop again, we'll take a closer look at this. And I'm sure this will give us a lot more valuable information. If you start to see it rolling over again, same thing. I do expect that risk on assets then would potentially have the chance to rally. So I think that's enough on that one. Now, the bullish scenario. So for those of you guys that are bullish, I know a lot of people are looking at this. Let's hide this, and then I'll bring it back in now. So I've seen a lot of charts doing the rounds as a falling wedge. Falling wedge pattern is typically bullish. How do you know it's a falling wedge? Well, you have your simple trend lines over here. You also have declining volume, which is what you would expect. But I've gone a little step further and I've overlaid different Wyckoff patterns over here. Let's just grab them. The Wyckoff schematics. Where's the other one? I had two. Have I lost? Oh, I hid the other one. Let me find that one. I'll get that one back. The other one was more relevant. So for those of you who are not familiar with Wyckoff, phenomenal trader, essentially it shows that prices move between different phases of accumulation and distribution. But usually you can only identify it when it's properly established, which is in phase 3. I think it goes through 4 phases, phase 1, 2, 3, and 4. We'll take a look at the chart now. But in phase 3 is usually when you can identify if and confirm if it is going to be an accumulation or a distribution pattern. So let me just look for that hidden part. Where is it? Here it is. There we go. Okay, let's take that off. So I'll make it first a little bit more transparent for you guys. You can learn a trick here. If you don't know how this works, you can change the transparency on images that you copy in. But first, let's show you over here how it works, right? So you get different phases. Like I said, phase 3 is more or less when you can start to anticipate that everything is changing within the market, whether it is an accumulation or distribution pattern. But you go through these different phases, and ultimately the spring would be where the bottom phase is formed. Now, that's not really the point that you're going to catch. A lot of people obviously think, well, they want to buy the bottom, so they'd want to buy the spring. But you can relate this as a range trader as well. I think you can see my mouse. Yes. Okay, perfect. If you see prices come down, give me 1 second, guys. Let me actually grab this. This will help a lot. I have a tool over here. Let me just find it. just quickly opening this. Here it is, screen cursor. There we go. Okay, you can see that, right? Perfect. So if you have a look over here, usually you go through distribution, then you stop and you start to form this accumulation phase. And you can see here there is a range. So look at the lines at the bottom over there. It says support lines, and then you have your resistance line. The way you can think of it is this spring phase would essentially be a deviation back into the range, retest over there. And then once you get into phase D, that would be where price starts to get moving very, very quickly. Now, the question is, if it does get moving very quickly, where could it move to? And how would a falling wedge pattern relate to this? So let's overlay this quickly. We'll spend some time on this chart over here. I don't want to make it too transparent. I think you should all be able to see that properly. There we go. So you can actually overlay this. So it's not going to fit in absolutely perfect, but the argument would be that this could potentially be, there you go. So do you see that price sold off over here from $29,000? We lost that critical level, major sell-off over here. And then you go through phase A, phase B, come back down. And now the argument may be, is this the spring phase, which we came down and tested 15,500? Well, in order to confirm that, and I'm going to clear this up now so you can see it, but just try and visualize over here with the falling wedge pattern. You got the falling wedge is the yellow line. And then have a look at this horizontal that I have, which is 17,582. This line is running across over here. So think of that as your range low region. Okay, now I'm going to clear this up, or let's just hide it so you can see everything properly. Perfect. So as you can see, in order to confirm this as the spring phase, you would need to see price do something like this. So let's say price gets up over here. Now you break back into the range, which is that 17,600. You can see the white line over here. That is your range low. The top over here is your range high coming in at 25,000. And then you have your mid-range at 21,796. And as you know, that 21,796 level lines up with all those high time frame zones that I've shown you, which need to be cleared before you can flip bullish. So you, as a Wyckoff accumulation phase, you'd want to see something like this. You want to see a series of higher highs and higher lows. So on the low time frame on the daily chart, we've been ever so slightly creating higher low, higher low, higher low where we are now. We only have like one small higher high. This is your main higher high you need to clear on this zone over here. So I would want to see price get back into the range, probably retest that trend line coming in at 18,750-ish dollars. Come back down, retest the range low, and then this would be an opportunity to buy because your invalidation is easy. So let's assume it bounces over there, and then you start to see the breakout zone over here. So let's quickly cover this. I'm going to double click, pause that over there for you. So if this were to play out like this, you would have the opportunity with better confirmation that you're breaking back into the range. That would mean that this is a deviation. Do you see that? You're deviating back into the range, and then you can start to target higher prices. Now you have something to work with in terms of making a trade setup. So looking to buy somewhere around here with your invalidation below the previous low, and then you can target at least until the mid-range. Now, if it turns out to be a Wyckoff accumulation pattern that starts to play out, you would expect that you're going to take out much higher prices than the mid-range. You're looking to possibly go, so you can do TP1 over here, and then you're looking to take off more at the range high, which is at 25,123. But as I mentioned to you, this is where you have a primary liquidity zone. The primary liquidity zone is the test of the underside resistance, which is the major breakdown level between $29,000 and $32,000. Now, I know I'm talking about big numbers here. These are major upside targets that we haven't really brought up on the show for quite some time, at least not from my side. So all I'm saying is you want to pay attention to the possibility of this taking place. So if you see that and you're already in the trade, TP1, take some more off the table, but not all of it. And then I would definitely do my final TP within that zone. This is talking more to you guys who may be swing traders, you're looking to hold positions over weeks to months, which is my style of trading, I will update you if I do something like this. But now we need to look at it from the other perspective. If it is not, let's just quickly clear some of that up. If it is not a Wyckoff accumulation, then you'd be looking at this. You have to also ask yourself, is this a falling wedge, which has a bullish usually pattern that reforms, or is this a parallel channel to the downside? Let's hide this one for you as well. There we go. Now, if you start to look at this as a parallel channel, you can see over here the way this would work. Trend line breakdown point came down, hit the bottom of the channel, okay, bounced up, hit the top of the channel, and then we interacted with the middle of that channel. Middle test to support, bounce back into the top of the channel, middle of the channel, support, and now that would give you your next test. So this is where you need to be actually pretty careful in case it rejects off of this, and then you start to get this sort of a scenario. This is still a real possibility. So bounce into that zone, 18,650. You would definitely want to stop out if you clear that level, because then you're probably coming all the way down into the middle of the channel again, which lines up with those high time frame zones that we've seen. It's 12,600. Maybe you do something like that, and then that would be, I'm not calling for 6K, but I'm just showing you where the bottom of the channel would be. I do expect a reaction somewhere out of this zone. And these Wyckoff accumulation patterns can be adjusted, right? This could end up being the spring phase over here, and I would rather see something like that. So the lesson that I'm trying to give you over here is you kind of want to position yourself right now to not look to short Bitcoin to zero, but to look for shifts in the market in case the market starts to become bullish. Things are quiet right now. Volatility is low, and it takes one player to move the market. I actually met somebody this holiday, this vacation, who showed me, they work in the UK, and they showed me, I don't have sources for this, but he showed me the WhatsApp message that he got from it, where it's within a close network of wealthy individuals. And it was from an oligarch in Russia looking for 10,000 Bitcoin OTC deal. And big players are definitely starting to look to establish positions. And all I'm saying is around that 10 to 13K level, you do want to look for a reaction within the market. So keep an eye out on that. And it's like Coins Kid says over here, I do expect future resistance to be back tested in time for Bitcoin. And that future resistance he has at 35,000. It's anywhere between about that $30,000 and $35,000. He's got a monthly chart over here. I wouldn't be as aggressive as looking for 35K. I'd be looking for that 28 to 30K, which is these wicks. And on a daily chart, those would be strong daily closes within that level, which means that at the very least, at some point, there should be a more aggressive relief rally, which we haven't really seen since we had a big push up, I think from 40K to 47K. That was the last major relief rally. Other than that, it's been a straight sell-off. So here you go, Alpha BTC also showing the falling wedge over here. He says that, I hope you all had a good Xmas. I do too. I hope you guys did too. Bitcoin volatility is still extremely low, with some low cap alts popping off. He says pooping off. I don't think English is his first language. He says we are really close to that macro bottom, with the weekly showing multiple drives of bullish divergence. One more sweep to the $11,500 region would be ideal then. And if you do look over here at the bullish divergence that he has, I'm not going to pull up my own chart just because I don't have it set up with the divergences yet. But you got here one touch. You have two touches. Typically for a strong scenario, a strong divergence, you would like to see three touches of bullish divergence. So if the RSI continue on to the upside and come back down one more time to test that level, whilst price makes its third low touch, I agree with Alpha BTC. This is my absolute ideal scenario. That would be a retest as well of the middle. If you have a look over here, that would retest the middle of the downward channel, and it would still keep that wedge intact. So then you have a falling wedge and confluence of the mid-level of a parallel channel to the downside as a potential test zone. Now, what could cause that? Well, China have announced that they're going to cut COVID to low threat disease class from Jan the 8th. China is scrapping COVID quarantine, including for inbound arrivals. That means that the Chinese economy could start to boom again. And will that put pressure on the US to create some form of quantitative easing or slow down on their rates? I don't know. I'm not a macroeconomist. I don't know if that's what's going to happen. I just know that this will create some sort of an impact within the market anywhere within the next 6 months. Why do I say that? Well, remember, the market is forward looking. The market reacts about 6 months in advance, which means right around now is when you want to start to look for shifts within the market and where the market could potentially bounce from key levels and form some sort of a bottom. But we don't front run those things. We wait for confirmation for the trend to change. And I'll say it again one more time. This is the key level that you need to have cleared. So on a wick basis, the very, very lowest time frame that I would be willing to look at is to get above the strong horizontal area, which is coming in around that $18,000, $19,000 level. And then I really start to build my position once you get above this zone over here, which is 21.5. So let's have a look over here at the different RSIs. Firstly, price is stuck below. It looks like another bear flag. They do take long to play out on the high time frames. So we had a accumulation phase, grinding up into resistance, broke down. Price is stuck below all the different moving averages and the different EMAs. And this has worked very well throughout history. Any time that we got above within this bear market, it just turned out to be a trap. The RSI over here also broke down, and it's still angled to the downside. I do expect one more sweep of the lows, and that would be the final confirmation that maybe the bottom is actually in. So if the bottom is in, or the bottom is near to being in, you want to start to position yourself with whatever may be the next best narratives. GMX, definitely one of the top DEXs that are out there. You get a lot of valuable information. You can see right now that the shorts are pretty much 91 to 37 in the long positions, meaning that over time, this gets to rebalance, meaning that there should be some sort of a spike up to reset this to more to better equilibrium at least. But what I wanted to mention is with GMX, you can trade over here as an offline exchange, or at least a decentralized exchange. And if you do look over here at the DEXs on June, you'll see that their volumes are increasing. Excuse me, let me just go back there. Their volumes are increasing rapidly. Go and check out their stats over here. Their 12-month DEX volume is at 823 billion. And 30 of that billion was done in the last 30 days. This narrative is gaining steam very, very quickly. And I do think that the decentralized exchanges, at least, and their tokens that come with that, are going to be the next major driving narrative going into the following bull run. Now, one that I'm looking at is Gains Network. So Gains Network recently joined us as a sponsor. This is pretty much the first sponsored show with Gains Network. And the reason that I want to bring them up is if you do take a look at their total user base in relation to what you're seeing with GMX, they only have 8,931 total users. Now, by the time this video is 24 hours, it's been up for 24 hours or so, I'll probably have double to triple the amount of viewers than what have actually used this network. And if you go and have a look at how the tokens have been performing for both Gains Network as well as GMX, so any of the decentralized exchanges over there, they're pretty much one of the only ones that have been up in this insanely bearish market. And that is typically a sign of strength. A lot of people think that when you're new to the markets, you want to buy the bottom. You want to buy coins that are down 99% because you think, well, that's a discount. But it's the wrong way to think about it, guys. You need to look for things that are strong, things that pretty much are in price discovery mode. And when you look at these tokens, these ones do not look too bad. There's very, very little price history over here, but it doesn't look like this, for example. Where's this one over here? The Solana lovers. Let's just put this on a daily chart over here. I mean, this is gonna require an astronomical amount of accumulation in order to recover a 99% sell-off or whatever Solana has done. Like, you want to look for charts that are new, charts that are fresh. Solana is going to need to go like this for literally over a year before it starts to get back to the upside. So check them out. You connect your wallet over there. There is a link in the description below. Start to have a look at these exchanges. I do think they'll be traded on more and more with all the fear around centralized exchanges. If you click on the link below, you can trade up to 150x leverage, which I do not recommend. I will be playing around on this exchange over the coming months in the new year. Let's just quickly click on that. Let's see how many of you have actually liked this video while this opens. Okay, 392 likes, guys. Please do me a favor, give the video a like over there. Click on the link over here, the description below. It will take you to gains over here. Click that link. It will take you through to the correct exchange. I do not recommend Googling it. Make sure that you click the link, because if you get taken to the wrong page, they might drain your wallet. The other thing I wanted to mention is you'll notice that a lot of them are built on Matic, on the Polygon network, which means that Matic could also potentially be a strong token, and it is on my portfolio list. This is currently my portfolio list. I'm sure you can take a screenshot. I'm currently charting all of these out, and I'll be planning my buys in the early new year. I have not accumulated anything from here yet, just to be completely frank with you guys, but do keep an eye out. I'm adding to this list slowly. I have GMX, GNS, I have DYDX. These are some of the decentralized exchanges. I have Curve as well, Optimism, which is what GMX is built on. So these are some of the coins that I'm looking at, which I think will be good going into the new year. I do have Phantom there as well. I'm not sure. I'm not confident about this one. The only confidence that I have is around Andre. I do think a lot of the old narrative coins from the previous cycle, of which Phantom was one, will likely not do as well going into the new cycle. So check the link out there below. Give the video a like. I would appreciate it. Let's look quickly at the low time frame charts over here. There isn't too much to say. Low time frame, everything has been consolidating. Here's the trade that I took. I haven't looked at this chart for quite some time. I said liquidity grab at 18,150. That was where I sold all of my longs. I can clear that up now. Clean that up. I mean, delete that. Price is currently stuck below the different moving averages. You guys know that typically this is where I expect bearish continuation when you have the 50 or you have the 21 below the 50, which is below the 200 exponential moving average, and price is stuck below all of those. Eventually, there should be some sort of continuation to the downside, and whether that is just going to be one more sweep of the lows to form that spring phase, I'm not so sure of yet. We'll need to play it by ear. More high time frame, sure, I think, but the range that we had from before, it's exactly the same. Here's your 2-hour chart. Nothing has changed. $15,895 is your range low. You can see the blue writing on the right-hand side. That highlights your range low. The writing on this side of here is your range high, 18,192. And then the mid-range, which is where price is currently stuck, is 16,959. So if you want to put that into your chart, kind of watching that. Could be a little bit of a trend line breakdown now, but prices need to get back into this mid-range level. If you start to see on this is for the low time frame traders, if you start to see prices recapture this zone over here and hold, then you can start to target back towards the June low. That's your range that you're trading. Get back above that range, and then there's your next range that you're trading, 18,150. So definitely a market for the range traders than anything. I think that's it, guys. I think that brings us to the end. If you have not done so yet, I'll show you actually outside quickly. This is the villa that we're in. It's right on the beach. Let's see if just wait for it to focus. So I'm kind of sitting on a couch over here, but yeah, right on the beach, really, really nice. I'll try and do one more stream later on this week. It will probably be on Friday. Let's see if anything changes within the market. Thank you all for joining. I appreciate you all. It's great to do another stream and get in touch with the community again. And I will see you all on Friday and then again in the new year. Have an absolutely stellar day. I hope you had a blessed Christmas. And if I don't chat to you guys before the new year, then have a wonderful new year. Hit the like, subscribe, and bell notification. Cheers for now.